Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Tuesday, the 26th of July. Starting off as usual with the FTSE 100, where we made slow progress. We had the RSI in the mid-50s, now it's in the upper 50s. 57 tends to be the point of no return, so then you tend to go back up towards the 70 zone, which obviously has the implied move up for a stock or a market. Here we've just clipped the 200-day moving average rather at around the 73.60 level. We've got the 50-day line there back down at around 73.10, and the range today is between the two moving averages. Want to see an end of day close above the 200-day line to give us the chance of a move up towards 76.50, which is post-February resistance. On the downside, but basically we had the June resistance line break there at 71.70. Above that we should be set fair for the upside, and then we've got the main 2-year support line there, of which the market multi-tested over the course of June and July, and so that gives us confidence that we could actually have a surprising move to the upside. Otherwise, obviously, you're thinking that this is the top of the range here, and then we'll come back down towards that support line. But at the moment, with the RSI in the right place, seems to be the case that we could make at least some more attempts at the upside. Moving along to Bitcoin, which has given the impression over just the last few days that it might be slipping after its recent stable range between 19,000 and 22,000. We had a bull trap through the 50-day moving average, have slid back from that, but now well below the 50-day line. We've got a March falling trend channel there as well. Initially, while we're below the 50-day line and the old 22,000 peak, we could head down to 19,000. Worst case scenario, I suppose, at this stage is that we make a zigzag within this falling March channel and head down towards the 10,000 area, but obviously that would be quite horrific. RSI is actually pushed out now below the neutral 50 level, so we're around 45, and that also is suggesting that we are heading lower, as is obviously the trend of the 50 and 200-day lines both falling at the moment. We need to break around 24,000 to get us back with a retest of old May support just above the 25,000 area, but at the moment it looks like with these multiple day failures at that March resistance line, we could be heading down towards testing $19,000 support initially. Onto the stocks, and some of them making their second day in a row appearance. First one is Active Energy, which after being rather sheepish at and below the 50-day moving average at 4.75 pence, has broken through it quite nicely. We were looking for the top of that January triangle to be hit as high as 8.5 pence. That may be done by the end of next month by way of the 200-day line around 7.25 pence. This stage only really back below, well below 4.25 pence, and recent support really delaying the upside scenario, which was triggered by bullish divergence in the RSI window. So a lower low for July in the price area, but higher RSI. So that was the kicker for the move higher, and also the reason for the inclusion of the stock. On to Dotdigital, which has had a good day in terms of the RNS. And here we've gapped higher, and we've held the gap so far, held sort of half the day's best levels. For you now is that we're trying to work out where the stock could go near term. The obvious area is towards the 200-day moving average. That's around the 135, 140 area, which obviously seems to be a long way away at the moment, but it is at the top of a rising trend channel from March. And if I can draw the floor of the channel, you'll see how all that fits together. At this stage, an end of day close above the late May resistance, so around the 93 pence plus area would really do the trick in terms of giving us confidence that we can actually hit that target towards 135 over the next 4 to 6 weeks. But let's see how we go just today, whether we hold the gap tomorrow as well. Moving along to Decal, which had a brief flurry to the upside earlier in the year in March. Since then, things have gone rather pear-shaped. We had a dead cross there back in May, but it looks like there may be light at the end of the tunnel now. The shares went to their most oversold in a year earlier this month, just last week. But with that sideways action there and the break of that resistance line there from May, does suggest that we could go on to retest July resistance around 3.5 pence, while we remain above 2 pence, which is, or 2.5 pence rather, which is recent support. So it just looks like the shares have finally had their selling climax and are ready to turn around. Moving on to a rather bigger fish coming in the form of Kistos, which is currently having a bit of a dance with Serica, I suppose. Here one can upgrade the trend channel that the shares are in. Before we're looking at sort of £5.50, £6 maybe. Now we've got this February rising trend channel, top of the channel heading towards as high as £7.50, and that's implied while we hold above the floor of the channel at £4.50. Ideally, there's no breakback below the 497 area, which was the second peak there earlier this month. So above 497, or let's call it 495 even, just for stop loss purposes, we have that 750 potential target. Maybe on track for the end of September, something like that. But certainly looks like a strong trend there at Kistos at the moment. On to KAZIRA, which I believe has had some news today. Here we've got a situation, if I can type in the right code, that the shares are looking like they're ready to move. We've had two unfilled gaps to the upside. We've got a rising 50-day moving average, and that suggests that there's plenty of gas in the tank now for a move, not only to the 200-day moving average at 1.1p, but the chance of retesting February resistance at 1.6p, perhaps even as soon as the end of next month. So good looking setup there with that wedge break and then the double gaps to the upside. So a bit of a handbrake turn in terms of the technicals on KAZIRA. Looking at Southern Energy, which was a favourite, obviously a real favourite between January and June. Since then we gapped down from the peak and now gapped up, which gives us and leaves us with a island gap reversal. That tends to be a strong signal, and the view at the moment is that while we're above the floor of the gap at 49 pence on an end of day close basis, we have the chance of filling that gap up to the 70 pence area maybe as soon as the end of next month. Be cautious obviously how today's close goes and see if we can get an RSI close above 50, or if you're really cautious, you wait for an end of day close above the 50-day moving average. That's around 60 pence. We haven't been above that since basically the middle of last month. The next contender is Dotdigital, which also seems to be revitalizing itself. Here we've had a decent move to the upside, breaking that falling wedge, breaking that triangle there from back in September. We did that around the 0.2 pence level. We've now got the shares well above the 50-day moving average at 0.21. Initial target here up to 0.37, which is the 200-day moving average. And then after that, up to as high as 0.7 as a best case scenario, maybe over the next 2 to 3 months. But I think we'd be quite happy just with the 200-day line over the near term, maybe the next 2 or 3 weeks on that stock. Requested stock comes next, coming in the form of Shield Therapeutics. Here we've had a rather painful experience over the last, since the start of the year. We've reversed that rally and then some. Looks like we're just hopefully coming to the end of the sell-off in the shares. We've got a resistance line there from January, and that is currently around the 6 3/4 pence level. So looking for an end of day close above that. RSI, probably wanting to see the RSI back above 30 as well, which I think if we got that end of day close above the 6 3/4 area, then we would have the RSI back above, outside the oversold area, which is quite a horrific looking RSI situation there. I think we went down to the low teens, something like that at the worst. So shares really oversold. If we do break the 6 3/4 area, then the initial target might be up towards the 10 or 11 pence area, meeting with the 50-day moving average. The upside, though, valid only really while we hold above recent support. Let's call it the 5 3/4 pence level. So maybe 5 3/4 is the stop loss on that at the moment. Going on to stock which I covered I think yesterday or very recently this week. Here we've got Tintra, which is also emerging out of a falling wedge. Seeing a lot of stocks like this. We had bullish divergence as well, so that's powered the move higher, and the view now is that above the 50-day moving average at £1, we could at least see a move back to the post-May resistance, maybe as high as 150 or so over the next month or so. So looking like a decent recovery there. Finishing off with a stock which I haven't quite covered quite some time, Technology Minerals. I know it has its fans, but this also looks like it's ready to break the downtrend that's been in place since January. Resistance line there around the 2.4 pence level, so an end of day close or weekly close above that, and we could be heading up towards the 200-day moving average at 3.25 pence or so, and maybe that's on cue for the end of next month. That's it from me today. More updates tomorrow.